Imagine you bought SpaceX stock 2 days after the IPO. The stock was already up sharply. Your portfolio is green. And like most people that week, you think you got in early. What you don't know yet is that a clock has already started. I almost didn't make this video. SpaceX is the kind of company everyone already has an opinion about, but the gap between what I expected to find and what's actually sitting in this document is the reason I'm talking about it now. The headlines are calling this the largest IPO in history, exactly like everyone predicted. But buried in the prospectus SpaceX filed with the SEC is a clause that almost nobody covered. It says that the higher this stock climbs in its first few weeks, the sooner company insiders get an early exit. Not eventually, not someday, on a specific date tied to a specific price that anyone could have read before today. SpaceX is, by almost any measure, an extraordinary company. More rockets launched than entire nations in a year. This isn't about whether they fly. This is about a deal structured so that the people who built this company get a head start on leaving, right as the people buying it today are still celebrating. By the end of this video, you'll understand a tank with two faucets, a set of valves with dates already attached, and why the number on your screen matters less than the document that was filed before that number existed. Picture a tank. The water level is SpaceX's valuation, the number everyone's looking at. Two faucets feed it. One is Starlink. It runs clear and strong. Real subscribers, real revenue, real profit. Exactly what everyone hoped. The other is xAI, the AI division SpaceX folded into itself in a deal worth roughly $250 billion earlier this year. This faucet isn't filling the tank. It's connected to a pump currently running in reverse. The $1.75 trillion number treats both faucets as if they're running at full strength. They're not, and we'll get to exactly how much that gap is worth. But there's a second system here, underneath the tank, a row of valves, each labeled with a date. They don't care what the water level says today. They open on schedule. And one of them opens early, automatically, if the water gets high enough. That valve is the one nobody's talking about. This is the moment to stop looking at the stock chart and start looking at the timeline. Let's start with what's actually flowing into the tank. Credit where it's due, this part is real. SpaceX launched the majority of all mass sent to orbit last year, more than every other country and company combined, and cut the cost of reaching orbit by over 95% in a decade. That's not a marketing claim. Nobody else has matched it. Starlink now serves more than 9 million customers across over 100 countries, and it's profitable, with billions in operating income. For satellite internet, that's almost unheard of. The defense pipeline is deep, the launch cadence is unmatched. If the question is, does the core rocket business have a real moat? Yes. So here's the actual question this video is asking. If the core business is this strong, why does one of the most respected independent research firms on Wall Street think the whole company is worth less than half of what it just went public at? And if you bought shares in this IPO, or you're thinking about buying now while the number on the screen still says $1.75 trillion, this isn't abstract. This is the gap between what you paid and what one of the most rigorous models on Wall Street says it's actually worth. SpaceX went public at $1.75 trillion on revenue of about $18.7 billion last year. That's a price-to-sales ratio of roughly 94, a multiple usually reserved for hypergrowth software, not a company that builds physical rockets and lost nearly $5 billion last year. Here's the number that didn't make it onto a single thumbnail. Morningstar, one of the most respected independent equity research firms in the world, initiated coverage just before the IPO. Their fair value, $780 billion, less than half. Their analyst, Nicholas Owens, split that number into two pieces, $611 billion for the core launch and Starlink business, the part that's profitable, dominant, and growing, and $170 billion probability weighted for everything tied to AI, the part SpaceX just spent roughly $250 billion to acquire. That's the second faucet. That's xAI. Owens modeled the best case scenario, what he called the moonshot, at roughly a 7% chance. The worst case, at 43% probability, would destroy more than $80 billion in value. He wrote that XAI poses a material threat of value destruction, and that he didn't consider it one of today's leading AI labs. So the $1.75 trillion number assumes both faucets are running at full strength. Morningstar's model says one of them is draining the tank. That's the gap, not sentiment, a number from a named analyst using a named methodology published days before the ticker you're watching right now started moving. Here's the part that lives entirely in the prospectus. Public, filed with the SEC, and almost completely absent from the coverage. When a company goes public, insiders, founders, employees, early investors are locked up. They can't sell yet. Standard. What's not standard is how SpaceX structured the release. Most big IPOs use one cliff, a single date, usually 180 days out, when everything unlocks at once. SpaceX built a staggered system instead, 5 tranches of 7% each at day 70, 90, 105, 120, and 135. 2 bigger cliffs tied to earnings, 20% after the first quarterly report as a public company, 28% after the second. Then the standard 180-day expiration for whatever's left. Added up, 35% from the 5 tranches, plus 20%, plus 28%. That's 83% of insider shares eligible to sell before the standard 180-day mark even arrives. Now, the valve that opens early. If SpaceX trades 30% above its $135 IPO price, that's $175.50, for 5 out of any 10 consecutive trading days before the first earnings report, an additional 10% of insider shares unlock immediately, on top of everything else. 2 days after the IPO, the stock had already closed up 19% on day 1 at $160.95. $175.50 is about 9% away from where it already was. One strong week gets there. This is the mechanism. The better this stock performs in its first few weeks, the faster that extra 10% becomes available to people who got their shares years ago at a fraction of today's price. Read that again. The better it performs, the faster insiders get out. And if you're holding shares right now, every green candle on your screen is doing 2 things at once, making you feel good and moving that exit date closer for someone else. There's one valve on this board that doesn't move at all, and it belongs to the one name everyone already knows. Elon Musk's shares are locked for 366 days, a full year. He can't sell at day 70, day 135, the earnings cliffs, the trigger, or even the standard 180-day expiration. None of it touches him. Every headline will call that reassuring, and on its own, it is. The founder isn't dumping shares on day 1. But here's what that headline leaves out. Every other insider, the early employees, the early investors, the people who got in years before this IPO, is on the schedule we just walked through. Their first exit window opens in about 10 weeks. By the time Musk's lockup even begins to lift, everyone else has had a full year of windows to sell into whatever demand is still there. Same prospectus, same company. 2 very different schedules depending on whose name is on the shares. Every date, every percentage, every threshold is sitting in a public filing. The asymmetry isn't access, it's who reads 150 pages of legal language before they buy. None of this is illegal, and staggered lockups aren't unusual for a deal this size. In fact, there's a real argument that staggering helps retail investors. When Uber and Rivian had single 180-day cliffs, the entire insider supply hit on one day. Uber stock hit an all-time low on its expiration date. Rivian dropped 20% in a single session when Ford disclosed its sale. Snowflake used a staggered schedule, the closest comparison to SpaceX. When its final tranche expired, the stock dropped about 11% over a week. Painful, but spread out. The market had time to absorb it instead of gapping down overnight. So if you're inclined to be generous, staggering might mean SpaceX avoids a single catastrophic day like Uber or Rivian. But spread out doesn't mean smaller. 83% of insider shares becoming eligible before day 180 is still 83%. The schedule changes the shape of the pressure, it doesn't make the supply disappear. So now it's your turn to answer the question this video opened with. Are you the person who got in early, or the person the early people are selling to? So if the supply doesn't disappear, where does it go? That's where the three paths split. Chase the pop. Buy now while the water's high and the valve is closest to triggering. We just walked through exactly why that's the most exposed seat in the room. Or write it off entirely. The deal was rigged, I'm out forever. That throws away a dominant launch business and a profitable satellite arm because the IPO mechanics favored insiders. An overcorrection in the other direction. The third path costs nothing but patience. Let the valves do what they're scheduled to do. Over 6 months, the tranches release, the earnings reports land with real numbers instead of projections, the trigger fires, or it doesn't, and by the time the standard lockup expires, the full picture is on the table instead of a sliver of it. At that point, the stock reflects 6 months of what XAI actually did, not 1 day of momentum. That's the price worth deciding on. The pop on IPO day, the 19% jump, the headlines, that was the tide coming in. It was real, nobody's pretending otherwise, but the valves were calibrated before the tide arrived. They don't care how good the party feels. And the highest tide doesn't just lift the boats, it's the exact condition that opens the fastest valve first. This is the bend factor. Tides go back out, they always do. The only question is whether you knew where the valves were before the water dropped, or whether you were still looking at the number on your screen. For now, the tide is what you can see. The valves were already decided.